Right. Very good morning, guys, and welcome to this class. Today, as we talked about, we will be covering this topic option chain analysis. And during this topic, we will also discuss briefly how the option chain works and how it will help us to make money and take some trade. Right. So, without further ado, we just gonna start and yeah, there you go. So what is option chain analysis? What is option chain? Right. So option chain is a list of strike prices, and especially for future and options, uh, FNO stocks and indices. Only those has this option chain. Equity doesn't have option chain. And options are of two types. One is call option, and the second one is put option. Call option and put option. Right. So we're gonna start with the call option first. What is a call option? We will take an example of let's say whatsoever it is. Let's say ITC. Okay. Before that, I'll tell you there are around 204 or 205 FNO stocks, and only on in those stocks we will have this option chain. Apart from that, no. Bank Nifty and Nifty on the top of that, and also Fin Nifty if someone is trading Fin Nifty. So we will talk about we'll take an example of ITC and whatsoever the price of ITC today's date. I don't know, but let's assume it's 265 per share, right? Uh, okay. So if let's say XYZ person is bullish on bullish on ITC, right? So ITC has strike prices like this. Okay, let's do 295. Okay, so these are the strike prices for ITC. We are taking an example. Okay, so every 5 rupees there is a strike price. So where exactly the price of the entitled stock? It's somewhere here. Right? 265. That is the price. So this side is a call option. This side is a put option. Okay. So XYZ person is bullish on ITC. He is thinking at the end of June month, ITC will touch 280 or 280 plus. That's what he's thinking. He's bullish about 15 points, right? From here. So what he can do, he can buy the call option of any entitled price below this area. 265, 255, 250, 245. Right? What he's thinking that he's thinking the value of the equity or the stock will go from 265 to 80. So the price of the call option might be around whatsoever. Let's say it is 5 rupees per day, right? 5 rupees per day. So what are options? basically. Options are something and similar like your term insurance plan, right? Many of you know, and many of you might not have an idea what is term insurance. Term insurance is something like you buy it for the year for let's say around 10,000 rupees per person, and the sum insured is 50 lakhs, right? If for God's sake the person has some incident, accident, something happens, and he passes away, family members will get 50 lakhs of money. That's term insurance. What if the person is fit and fine after 1 year? What happens to his premium that he paid, the 10,000 rupees? The 10,000 rupees is now considered as zero. Now he has to buy another plan, or the same plan, he has to renew it for the next year, and he has to pay the premium again, which is going to be 10,000 rupees, right? So he will keep paying for the rest of his life, and something happens during his lifetime, his family members will be uh, given 50 lakhs rupees or whatever the sum amount. Just like this. So now you are thinking that the call option, the ITC will go from here to 280. What if it doesn't go? What will happen to this 5 rupees? The 5 rupees will become zero. What if it goes to 275 rupees at the end of this month, right? Which is like around 10 days from now, at the end of this month. So, what are what will be the total value? The total value of the call option will be at that time, right? From here, it will go all the way to 10 rupees because the price now shifted 10 points from 265. That is at the end of the month, right? What if it doesn't move at all? It moves 2 points up, 2 points down, 3 points up, 3 points down, and at the end of the month, it stays below or at 265. So the 5 rupees of option that the person paid will become obsolete, will be zero, right? It's going to be zero. We will go and check it out at a couple of different websites. I preferably I use Sensible. I will write it down. If someone has Sensible, if someone has like trading account in Zerodha, Five Paisa, ICICI Direct, Angel Broking, and some of the like 5 or 6 different trading account, then you have an access of Sensible. So and also you can do NSC. Yeah. So now I'm going to show you. Uh, this is the Sensible's option chain analysis, just like I was talking about. Right? And now I will. This is the option chain of Nifty. Right? So what I can do, I will go and change into ITC. There you go. So I was mentioning every 5 rupees, but this stock or the ITC has every 2.5 rupees of option chain. So the current price is somewhere around 263. Yeah, I'm close. So you can see one the left hand side of this uh, option chain is called, and the right hand side is put, right. One is called, one is put. So how you can remember how we can utilize option chain to make our decisions. Right? You're buying an option, you're selling an option. That's a different story. But how the option chain will guide us to make decisions and will help us to take a trade, right? That's the main important thing. That's why we are here, right? All right, back to this. So let's consider a scenario. Okay, I'm gonna delete this entire part and also the entire part. Okay, let's assume let's assume our price is here, right? Our price is here. Let's assume you are in this particular room. Yeah, this is a room. Let's say this is 265 is the room. You are in one of the hallway, and the hallway has numbering like this, and each hallway has a door in the middle. This is a perfect way of understanding the option chain. Right? These are the little doors on the top. That this is call door and this is put door. Right? So you want to go on this side, downside, whatever the side, 255 this side. You want to go this side. So what you will do? You will open a door and you will easily go. But what if there are you're alone, right? You're alone in the room. If what if there are five people standing behind this door at this door and they are holding the door so tight so you cannot open it, right? Consider as there are five people at this door at the back side. You're trying to open, but they are so strong because they are five and you're alone. So they are not letting you open that door. So what you will do now? You will go and try to open the door from this side. Right? What if there are only two people? Yeah, if there are only two people on this side, what are the chances of you opening this door compared to this door? Of course, you can now use your power. Of course, the two of them will be stronger than you, but what are the chances? The chances are better here than this side. So you can try to push as much as possible, and you might crack this side, right? Just like this, you need to remember what are the call options. Call options are act as resistance. They are resisting you, right? What are the put option? Put option will act as support. Call is equal to resistance. Put is equal to support. The easiest way is to remember car, and easiest way to remember as pass, right? Put as support, call as resistance. Call as resistance, put as support. Pass and call. So why we call as a support? Let's draw a little line right here, okay, like this, okay, and then like this, like this, like this, like this, just like this. Okay. So let's say this is 280 price point. This one is 260. This one is 270. Similar to this one, 270, and similar to this one, 260. Right? So what is happening? So if the market drivers they want to drive the market in the other side, like say from 280, this is falling all the way to 260. But why it reversed from 260? Because what happened? There are more foot riders. There is more support at 260, right? Compared to whatsoever in between. So when this stock, right, when this particular script was coming down from here and here, there was no support like this, right? The support was not strong as it was of the call side of the resistance. So it went down and down and down and down all the way to 260. Why it reversed from here? Might be because the put writers, the support was more. It was more here than they were needing, right? They were trying to push the market as much as down, but it got reversed because there was a more support from here. It bounced all the way to 270, right? 270. And also it got reversed from there. Because now 270 has more what? Resistance, right? More resistance here at the both side, right here. More resistance from 270 strike price. It went down all the way from 270 to 260. Again, what happened? There's still more support and it went down up again, and then finally it cracked down from below. So does this call as a resistor or put as a support? The number of the call and support, call and resistance, call and put side are same as always? No, it changes all the time. It changes all the time, right? So every minute the support and the resistance, the amount is changing. There are different ways you can find out. Like I said, you can find out definitely from Sensible's website, or also you can Google easily. Let's say NAC option changes like this, right? So you can select the script out of these. As I said, there are 200 and some odd number of equities or that kind of stocks available. So only in those stocks you can see option chain, just like this. This is the ITC's option chain. It is at 263 rupees right now. So this side is the call side, this side is the put side, right? So now look at this call side and put side. How you can, what are the numbers you need to look at, right? You need to look at some specific numbers, right? So the strike price is right here now, 265. This is the next one. So the amount of call writers on this side are only 958 compared to put writers 614 at 265. Right? But when you go down on this side, look at the call side, the resistance is 609, but the put side has more, almost double, 1016. Right? So, what does this side indicate? The put side indicate. The put side at 260 indicates, we'll go back again. Okay, we will be going back again to our 260 side. Let's say this one is 260. Okay, what I'm gonna do, I'm gonna take this one and put it here. That should be 260 here. So 260 strike price has almost 1000, 1k, 1k. They are pushing. They are there to protect the price from falling down, right? So they are here, thousand of them. So by any chance, if this price, right, if you are managed to open a door at 265 right here, right? If you are managed to open a door at 265, now we are in the next chamber of 260. Let's see here, right? So what are the chances of the price going down from 260 and below, or taking a reverse turn from 260? We're gonna look at again the option chain. 260 has only 609 resistance and 11 and almost 1000 as a support, right? 1000 as a support and 600, and I'm gonna write down 600 only. One side is 1000, one side is 600. Who gonna win? Of course, the support will win. The support will win, and it will push the price back again. It will push the price back again from that part to, it will push it again on the higher side towards 261, 260, 2, 3, 4, and 5. Okay. So when the price is moving away from 260 towards 265, what are the chances again? Let's have a look at 265. 265 has 958 on call side and 600 on put side. Okay, so now what we're gonna write? We will write again what are the numbers, right? We will write again. So price is coming down all the way from here to here, right? So now I will write down here is 900 and here is 600. Right? So now the price is coming down. Let's say this is coming down from 260 towards 265. So the 900 call writers will be acting as a resistor, will not let the price go and break 265 range because they are more than 600, right? They are more than 600. That's why they will not let the price go higher. They will refuse and they will say, okay, the price should remain at the same or below from 265 until and unless this amount is changing. Let's say if this amount is, let's say it's 1900 now, and on the other side, it is not as 200, not as a, not not 600 anymore. Now this price is changing because, as I said, it will keep changing all the time. Every minute, every 3 minutes, the website get updated. Now let's say the price is coming down, and it is 1900 on this side on the resistance side, and support has 265. Support has 3000 of call writers, put writers, and call writers on 1900 only. So who will win? Of course, the put writer will win. And now the price will break this door and will be shifted to the next chamber of 265 to 270. So this door is open right now from 265 to 270. And now what will happen? The put writers, the put side will be now acting as a support as 3000. There are more here, right? And now it will stay here until and unless one side is overwhelmed by the other side, right? If both sides are sort of similar or as around same size, then the price will be wandering around the same price point. 1 point less, 1 point down, something like this. Until and unless there is a sudden change in call writing or put writing, then you will see a move, up move or a down move, doesn't matter, right? So call and put. So how we will know this number? What is this number? Right? We're gonna go to the website. I'm gonna talk about this. What is this number? So 958, 600. This is called as OI, open interest. Open interest. What is open interest? Open interest is nothing but number of open position at particular price point. Number of open positions at particular strike price. So there are 958 of call writers at 265 who are thinking the market should not or the ITC should not go above 265. However, the put writers are thinking, there are only 600 put writers are thinking that the market should go and cross 265. Moreover, you can see the 270 strike price has higher number. So if in case the market breaks 265, it hovers around 265, 267, 68, 69. What will happen when it reaches 270? Of course, it will face a rejection. C means call act as resistance. So call will act as a resistance because there are 2,695 call writers at this point compared to only 700 of them on the put side. So of course, call writers will win in this situation, and market will turn down from 270, and it will fall again towards this point until unless there is a significant amount of support writing. So if say let's assume the market on Monday opens, I mean the ITC opens at around 269.95. 269.95, this is where the ITC opens. Immediately it will face a tremendous amount of resistance because of the call writing, and it will further fall down and down and down and down. I think 260 is the nearest support that you can see right now is more thousand of put writers. They will hold the position. Why am I using all the time writers? Whenever you look at the option chain, you need to consider whatever the numbers are indicated in here. You need to consider as a writer's position, writer's perspective. Writers are the market makers. They manipulate the market. They move the market up and down. So they are the money makers. They move the market. They know what is happening. So whenever you see these numbers, you need to think in the on the side of the sellers. They're called writers. Writers are the sellers. So you need to think about them. So why the rest of this option chain is 0, 0, 0, 0? Because nobody is interested in creating the position on this side, right? And why this one side of the top part of this area 265 and above is on the call side is gray and the bottom is white, and the bottom is gray and the top is white on the both side, because what we call as, so if let's say if the market, I mean ITC is 265, we will call the 265 option is the money option at the money option. If okay, what will we call as 260? We will call as in the money option, because it's already surpassed that particular point, surpassed that particular point. That's why the 260 on the call side will be in the money option, and 270 will be out of the money option. This is from the call side. What will be on the put side? Completely opposite, right? 260 is going to be OTM. 265, of course, is going to be ATM at the money because the market is there, and 270 will be ITM. Why? Why I'm telling you why is ITM? Because when you think about put side, let's say put side is working from market. Put is what? Put you're expecting the market or the strike will go down or the price will go down. That's why you need to move from the higher price to the lower price. The higher price is this side, right? And the lower price, and the call side works completely opposite like this. Call side works completely opposite just like this. So when the market is at 265 from the put side, of course the 270 is been already surpassed. 270 they already passed that point, and now they're working towards the market, working towards down, working towards 265, 260, 250, 255, 230, something like this. So whatever the price above this point, let's say 280 or 290, right? Or let's say 300, all of them will be what? They will be ITM. These all are ITM, right? These are all in the money option because they already passed these points and now working towards this one. So what will happen? Let's say what will happen if the market after a couple of days, uh, the ITC will be at 260. So these price points now, if it is 260, it will move like this. So 260 will become at the money option. 265 will be in the money option, and let's say the out of the money will be nothing but 255 and below. Everything will be out of the money. I hope you get this point. We will write here put side, and similarly it works on the the call side. So let's say 265, 255, or whatever is already in the money. They already passed this option, is in the money option. But what is still need to acquire? 270 plus. Whatever 270 plus will be OTM option. Right? I hope you're getting this simple logic, right? So what happens after a couple of days? The market is at 270. What will happen? Of course, if it is at 270, the 270 will become at the money option, and now 200 and let's say 275, 280, 275, or plus everything will be acting as the out of the money option, and this is nothing but the call side. When is the best time to trade options? I'll tell you one thing, the market maker thing. Okay, a wise person said you should not buy the call to and the first week of the month, because the first week of the month the call option prices or the put option prices or any option prices are higher because of the time value, because the option will expire at the last Thursday of the month, and it will become obsolete if it is out of the money option, right? If it is out of the money option at the end of the month, it will become zero. Whatever the price will be down, because it decays. It decays. The time decays the value every day. Saturday, Sunday, the market, if the price remains at the same price, is opens at the same price, the amount, the value of the out of the money option, either on put side or call side, will be decayed, will be lower than the closing value of previous day, right? So is it good to buy the option or is it good to sell the option? If you have a capital and if you are the safe trader, you don't want to panic, you don't want to sweat, right? You don't want to sweat when you look at the window of your P&L. Then you should be, and if you have a capital, enough capital to write the option, because writing option, selling option requires more capital than buying the option. Same thing, right? Writing option, selling option will give you less returns than buying the option. But buying option is risky as I said, term insurance. If you bet, if you call or whatever, it doesn't work, then that will become zero at the end of the month. Right? So selling option will fill your wallet. I will write it down. This is a very important thing, guys. You need to selling option will fill your wallet. However, buying will fill your it will fill your it will fill your suitcase, right? But if you are on the right side of buying option, so selling option will give you money, a definite money, right? Selling option incurs indefinite amount of losses. There is no sky, there is no limit for option, if you sell option there is no limit of loss. Buying an option has a definite amount of loss but indefinite amount of profit. I will put it again. I will put it together again. Okay. Let's keep the sentence at the bottom. I hope you have the little photo of this. So let's, if the option price of ITC or whatever is like 5 rupees, and the lot size is less 1,000. Just taking an example, right? So the initial amount of money that you need is 5,000 to buy the option. Put or call doesn't matter, right? The same amount if you sell the option, right? Selling option requires more capital, and then the value of the stock 265, and depends on Depends on your broker. Your broker will give you leverage, blah blah blah, whatever it is. Let's say it requires you 2 lakhs of capital to sell the option. Maximum profit if you sell. Okay, I'm gonna write it down here. If you sell 5 rupees, you sell rupees 5 option requires 2 lakhs and maximum amount. What will happen? Because you're thinking you are selling now, right? You're thinking this should go down to 4, 3, 2, 1, and 0. So what is the maximum amount of profit you will have? It's only 5,000 because the lot size is 1,000. The maximum amount of profit is going to be only 5,000 rupees, right? So it's like 2.5% of return for a month. That's your thing. If you're a safe player, you sell the option thinking about, okay, the market is in uptrend, so let me sell the put option, or let me sell the call option, or whatsoever it is, right? So you sell according to the market sentiment. If the market, like say, if you're thinking the market will not go or the strike price will not go above 300. So what you do basically you go at 300 and see what is the price point, what is the value of the option. You sell that option if it is like 5 rupees at 300. ITC will never go at this month surpass 300. 300. You sell that option, get the 5,000 rupees at the end of the month, save playing, no problem, no other. Right? Because right now it requires 35 points to go and cross 300. So if you go and look at 300 strike price, we'll have some nice number. You can this is the highest number, the call option. 3,909 of them are thinking the ITC will not cross 300 in this month itself. What is the value of the option right now? Let's check LTP. LTP is the latest last traded price. The LTP is at only 25 25 paisa, right? It's only 25 paisa, but this is yesterday's value. If I go and check the option, or let me go and check the, chart. Let me see the chart. Is ITC 300. I'm checking right now on my device. Give me a second. So if you sell the option, you will be getting ITC 300 or 25 paisa is the current value. So at the end, at the first of this month, the value of the ITC call option, the 300 call option was around like a rupees and a half or something. However, every option it opens 3 months prior. So the June option was open in what? April, right? It was open in April, and when you look at the April's 300 call option value, it was over 8 rupees, 9 rupees, 7 rupees, something like this, right? So if you buy that one in April, right, April and May, 2 months, and this is third month, right, and it was like say 8 rupees. 8 times what is the let me see, lot size is 3,200. I think I'm correct. Yeah, 3,200. Let's say if it is 8 rupees and it's 3,200, this is gonna be your profit, but you have to wait for that period, right? It's like 25,600 rupees. That's your profit after investing, let's say, rupees, sell that option. It requires a lot of money. Okay, basically it requires a lot of money, and it's around like 1 lakh rupees. That's what you need to invest into selling an option. But if you invest 1 lakh rupees in 2 months, you will get 25% of return, almost 10% for for that value, right? Because today the value of that option is only 25 paisa. So you can exit the position and let it go, right? Because at the end of the Thursday of next week, I guess, this is where the value will become zero and it's done. Right? So selling option will give you a nice return, but you need to have a capital, and you sell the option at the end at the start of the month. Like say, if you let's say first of July, the July, August, and September. The September month option will open. September month's option will be open for trading. So basically, you can go and sell the 300 call option of ITC because that might have a higher value, 6, 7, 8 rupees. You sell that option, relax, and relax for a couple of 2 months. You get a nice return if you want. But let's go back where we need to earn money by not investing that amount. Okay. So if you buy option, if you buy option, what is the risk? The risk is only premium. That's what you pay. You paying premium. Let's say if you buy option at 8 rupees and it's 3,200, the total investment will be 25,600 rupees. Right? 25,000 only. That's what you need to invest. But you are bullish or bearish doesn't matter. What if the price goes into your favor and the strike price now it's 18 now? It's 18 now. So 18 times 3,200, right? 18 times 3,200. So you will get 32,000 additional to that. That's your profit because it's 10 points gain. Your profit 18 times 3,200 is like 57,600. Right? That's by putting this amount, you're getting double. And you don't have to wait for a month or 2 or 3. You can, like, if you're bullish, if your fundamentals are good, if your study is good, your analysis is good, then you can earn this money. That's what it says. Selling option will fill your wallet, buying option will fill your suitcase, because you prefer to earn money quickly, like everybody does, right? Everybody who is listening to this is thinking about making money as soon as possible. You want to become a millionaire, billionaire, but you don't want to go and study that particular thing, right? Why and how I'm gonna make that money. So buying option will give you money. This is your risk 25. Of course, you can put a stop loss. That's your complete risk 100%. But earning is potential. Like this will even go to 50 or 60, right? Like say on expiry day on Thursdays, the Nifty's option was for 5 rupees and 50 is the lot. 250 is the investment value if you're buying that particular option. And the same option went from 5 rupees at around 11, not 11, 110 rupees, right? This is the total you're going to get, right? So what is the thing? 5,500 rupees is your gain. How much is the gain? On 2,000%. Right? That's your gain on that particular trade. Risk is only 250. That is for 1 lot. If you go for 10 lots, it's 2,500. If you go for 5,000 lot, then it's gonna be, of course, 25,000. Right? That's how it's gonna work. And each rupee will give you 5,000 rupees if you are in a good side. Or else the 25,000 will become zero within a span of 2 minutes or 1 minute or whatsoever. So you need to catch those moments. So this class, today's class, as I told you, we're just going to be talking about option chain analysis. How we analyze just by looking at the call side, put side, or writing, and then you go and create your position accordingly. So where to look at particularly, where to look at the option chain? Sensible is one of the best thing because it gives you a graphical format. It gives you a graphical format. I will show you now. Option chain. You go down here. You can see right here. The call side is red. Put side is green. It gives you like if you are not good at the numbers, you can also look at the bars which are appearing here, and then you can simply look at the bar who is bigger and bar who is smaller. Right? Let's go and check out Nifty's option chain for Monday tomorrow. And the Nifty's price right now is 15,348 or something like this, 293. Okay, whatever it is. So it is at this point, right? This is the option where I said at the money. These are the in the money call option, out of the money call option, out of the money put option, out of the money in the money put option. Right? So market, let's say, let's analyze what is happening. So here we just check where are we here 350. So here says OI open interest in lakhs. So the closest highest open interest, of course, on the call side, the call writers are writing at 16,000 strike level, 27 lakhs, 15,800, 20 lakhs, 15,500, 21 lakhs, and then 15,300, of course, has still a writing of 16 lakh. They are thinking market should not go beyond 500, 15,500. But on the put side is completely different scenario. Put side has 15,500 has 37.8 lakhs of put writing. That means they are thinking the market is gonna go cross below cross above 15,500 on Monday. And also the put writing is good on good support is at around 15,000 itself. So the highest put writing right now is at 37, 15,500, 37.8 lakhs. So if by any chance the market gaps up around 200 points from here, 15,550 plus, then what will happen? The best scenario, the market will go and test the value of 15,500, and it has a highest amount of put writing, and it will reverse from that. And then this is the best time of buying a call option because the call, that's why, because the support is high, and then you can buy the call option of whatever the price will be, and then it will go and give you money. Right? We will also discuss the same thing in our question and answer section, and we'll take it from there. And the option chain is really good, really easy way of understanding the market. If you understand the market and if you understand the option chain, then you will understand the market easily, and it will like it always respects the option chain unless it's the expiry day. There is a lot of adjustment, new rollovers data, the positions are created. So that's why on expiry day you have to be quick. You have to be like, you cannot just create a position and go and sleep. You just have to monitor the position all the time on expiry day. All right. So I will take your leave right now. And if you have any question, comments, please put it in the group. And who don't have an access to the group or to my Telegram handle is at we'll see. That's my Telegram ID. And I have a group called as Order Flow Forum. Order Flow Forum. You can also join this group and ask me questions if you have any. All right, so order flow class forum. Okay, but this is how you type it out to look it up, and this is where you will find me or different traders who are there to help you out as well. Perfect. So thank you so much, guys, and have a good one.